Hi, everyone. Welcome to another Learn, Grow, Invest meeting. I'm Jermaine, and I'm joined here by David Rose. So today we're going to be covering some stocks that we think are worth our attention for the next few months. David will be going through his picks, and I'm going to be sharing my thoughts as well based on what he'll say. So if this is your first time here, welcome. We talk about stocks, investing, real estate, just about anything investment related or money related that you can think of. It's our mission. So we definitely want you to show your support by liking this video, subscribing to the channel if you have not done so already, and just enjoy. Feel free to share with us in the chat anything that you have in terms of questions or comments on the topic that we're covering. We are a Christian-based investment community, and as such, we start every session with a word of prayer. So I'm going to do that now. Lord, we acknowledge your presence here. We pray that you will bless this time. We pray for wisdom, understanding, and we pray for the ability to learn and share our knowledge with others. In Jesus' name. Amen. All right. So, all right, David, we're just going to jump right into it. Where do you want to start? Which one you want us to talk about first?
All right, so I'm just gonna share my
screen. Okay.
Yeah, but I'm just gonna give me a second.
Yeah, man, no problem. All right, so I see Jay here. Hey, Jay. I see Orville here as well. Hey, guys.
So I'm just gonna go through my picks from what I have published in the public media from January.
Yeah.
And just assess what's been going on. So that's what I'm gonna do it today, guys. And I'm pulling the JSC's June data to show you the first half year performance to make sure that it's if you want to call it equitable in the best sense. All right, so give me a second.
Yeah, man, ready for it. Hi, Brianna. Welcome.
All right, all right, share screen.
All right. Yeah.
Live?
Yeah, man.
All right. So, I basically discussed in this article at the start of the year. So January 10, guys. So not the date. So this was when we had less information, like about such a crossing implier and so many other things. So please bear with me in this sense. So at the start of the year, I made some stocks that I thought were going to perform relatively well in fall in the year. Some perform
Zoom
well.
in, David. Zoom in a sec. Zoom in. Yeah.
Sure, that's fine. So I need your assistance.
Perfect. Yeah, that's good.
So yeah, I'll listen to the date right here, January 10. So don't beat me because I didn't know about certain events that were going to occur. So it's really just me making an assessment based on where you were at the start of the year, and it was still very unclear then. It's not fully clear now, but yeah, let's just look at some of the things I have mentioned. And here's a funny joke. Siboney was the second best performing stock for 2020. And 2021
seriously, David, you're mentioning Siboney right now. Seriously.
No, we have to mention the meme stocks. We have to mention the meme stocks. It's a shell, but it's actually like gave some people some money and it burned out a person. So you have to stock facts. So yeah. And the funny thing about this is that it's 11 cents and closed at 22 cents.
Yeah, and so where is it? No, I think today it's higher, isn't it? Let me check.
Yeah. Don't worry, I can pull up the data right now. Oh yeah, guys. So anytime you want to find information on a particular JSC stock, just type in the company name or the ticker, and trading information or JSC, and those combination of words will allow you to find the trading data very quickly. So Siboney closed today at 53 cents. So persons are still in profit, but it's not necessarily what you'd call a massive win for those who bought when it really peaked.
Yeah.
And I'm sorry with the Siboney so far, but we have to just look at the memes because it just ran up yesterday and then kind of took a nice halt today. So minus 0.22 divided by 0.22. So Siboney is up 141% for those who bought at the start of the year. Big up to you guys. And for those asking what I'm talking about, this was Siboney back in February. nice and steady at 22 cents, and whoops, and steady descent down to the ground.
Yeah, I'm here thinking about those persons who would have bought at 230.
Look at the volumes at those prices.
Yeah.
Like,
Yeah.
well,
Some persons definitely got burned there.
well, if you play with fire, don't be surprised if you get burnt. So it's actually a stock list. So in this case, I was looking at 10 stocks. Guys, don't beat me. So first rock, it's been quite a controversial month, if I say so myself, based on all that's been happening in developments thanks to the Gleaner. And then the Gleaner had to, put a little correction, have a little legal threat. First rock had a pretty rough start of the year. So for those who don't know, First Rock is a firm that will focus on private equity and real estate, and they've reneged on the private equity focus and decided to focus straight into real estate. So they sold all of financial services at the end of March for $1.1 million, and in this case, they're just focusing solely on real estate. So Hambani broke ground, and they've talked about Costa Rica, ambitions in New York and USA. They disclosed their $700 million bond yesterday, but it's not where it should be. So, for those who don't know, they sold 2 units in Brickell, which I initially, when first I could plan to list in why they're going to Florida. Cape just left. And they also sold one of the Watermill Villa units in Montego Bay to, cover the repayment of a loan. So First Rock ended up breaking a covenant with a Barita loan, and they had to repay, I think it's like $1.8 million at the end of March. So, cash flow got hit there. They tried to raise some money through this bond, and they tried to raise $1 billion, only got $700 million. Extended the timeline to actually close the bond. It's been rough on them. So, financial wise, profits are down like less than 5%, but let's just look at the numbers. So, for those who don't know, instead of you having to just search through this right here along the change instrument area, you can just type in the ticker of the particular stock you're looking for, and it'll load up on that particular stock. So that's how I actually navigate pages very quickly. And like in my URL or search browser space, where I type in JAMT, like the training information comes up first, and then I just adjust the URL. So First Rock, started out at 12.55, 13.51. This is what the JMD side. It was above IPO price recently, and then well below IPO price again. And for those who don't know, the IPO price was $16, and I believe it was $16.17. That's correct. Not $16.72, but $16.17. So it's far from where it should be, and they only paid they pay a dividend in June. Let's see what they do going into September with the new money and so on. But yeah, JMD, that's the JMD. The USD has had a very mixed performance. So First Rock's functional currency is US dollars, but they have 2 listed form of stock. And in this case, as you can see, it started the year at 0.08. It's 0.0758, but the JSE systematically rose it up and closed out today at 0.07. The correct price is 0.0724, and as you can see, it's down 7% year to date. So pretty rough for First Rock. And it's going to be a hard time going forward, because with all this controversy right now, it's going to be hard to kind of deal with that, confidence by investors. At the same time, the growth prospects they need to push forward, because for those who don't remember, First Rock was supposed to raise $10 million US more in a rights issue during 2020, and was another $10 million round this year, but with the other plans. So they went to the debt market, didn't get the target they wanted. But let's see what goes on next. Any comments, Jermaine?
No, not for me. I'm here trying to, say what persons are talking about in the comments. So
that's fine. All right, so the next stock is Cygnus Capital Investments Limited. This has been a pretty mixed stock because, yeah, the company's results have been doing great, but the stock price is a different story. So the data alone already shows that, yeah, first week is down. And if you buy at APO price as a shareholder in JMD terms, you got away, but still not where it should be. 7% down for those holding from last year at the end of 2020 to now, down 7%. And JMD just came under some selling push after the shares were listed, and yeah, it just been trading sideways.
I think persons who are interested now in the SRF IPO would maybe be interested to understand what would be a good catalyst for Cygnus to see it move from where it is right now.
Well, here's a funny thing. So the JMD hasn't seen much trading pressure in the last couple of days, but when we go to the USD, that was pretty crazy. Like even David in the group, what David I'm talking about, not myself.
Mm-hmm.
So it's like him starting having the money is in trading his account, because he was saying like he was so ticked because imagine that there's gold in the market you can't buy it because you're broke, or in this case illiquid. So SRF prospectus came out like I think it was July 16, and trading at 0.1357, and then Tuesday, my God, 0.111 as the lowest price, and then 0.12 again today, and 7,000 units traded there. So some persons are, as you can see, are exiting their Cygnus credit to potentially going to SRF, because I have not seen this kind of volume since the year started. See?
And that's what typically happens, I find, whenever there's an IPO on the market. Persons may try to exit from one position to go into that IPO. So I always, tell persons, look for opportunities on the market during times that offers are out.
And that's correct, because if it wasn't for COVID and the world progress as normal as it should have last year, I'd have made a lot of money on that actual event. Because what happened was that, I'm investing since 2016, for those who don't know, and I was one of the original Susinco IPO investors. And during that time, I realized that within less than a week, all the stocks on the market dropped like that fast. Because let's give a scale of how Susinco was powerful. So Susinco wanted $6 billion in their IPO, right, guys? And Susinco got not necessarily 12, not necessarily 15, but $18 billion in 1 week. Now, there's no other company which has done that kind of money or scale to date. TransJam did $14 billion in their listing, which was money that the company raised, but they got $25 billion in oversubscription. But Susinco still carries that kind of volume and respect in the Jamaican landscape, because I'm pretty sure Restaurant of Jamaica that runs KFC was to list tomorrow, or still going to probably list on the JSC. You see the market probably crash in a couple of days. You saw a couple of days going into the actual opening date. Because for those who are actually wondering what's going on, so companies which are known as general Jamaican staples, very integrated in our general daily lives, like persons gravitate heavily towards them. They're going to be like, oh, NCB. Nah, I'm not talking about like financial services company. I'm talking about like the durable goods, the things that you can actually see persons spending their money directly on, something that touches the general economy on every social or economic spectrum, or even looking at, potentially income levels, race, whatever. As Susinco said, the average Jamaican has about 2 or 3 Susinco products. We Susinco product every like 3 days, or like almost every day. So that kind of gives you an idea as to how deep Susinco's reach is in the country. So if there was a case of, in this case, Research of Jamaica coming to market, which actually was the case for in Jamaica, trust me, it would be a whole different ballgame, because TransJam kind of pushed stock prices down last year until its IPO, because in that case, people are just like, it's a government IPO, Wigton did 100% for some persons, like what life-changing money. So why am I not going to buy this government IPO? So yeah, so that the Cygnus trade right here on last week Friday kind of shows you that when their IPO is coming out, a person's want to deploy capital, you have to just be ready to capitalize on it. Because to get Cygnus at 0.111 on Tuesday, I saw it, but I didn't have any cash in my account. Well, I didn't have any US dollars in my account. That shows where Jermaine always says, keep part of your account in cash, but in this case, keep part of your account in US dollars.
That's what I was just going to say. I always recommend you have a little bit of cash because opportunities are always coming up. So if you're fully invested, then you can't take advantage.
That's true. It's just so crazy that, how things played out. All right. Let me zoom in. So for those who are wondering, Cygnus has already basically beaten out their 2020 financial year in just 9 months. So you should see. So for those who don't know, Cygnus is financially ended on June 30, 2021, and the results are due by August 29, 2021. And that we're asking how I know that. The JSC will dictate that you have to submit your audited financials within 60 days or submit an unaudited in 45 days, and you're audited in another 45 days or 45 and 90. So unaudited in 45, audited in the full 90 days. The Cygnus chooses the first option. So by August 29, you're going to see Cygnus results come out. Probably might see some price movement, but let's see what happens. And coincidentally, when Cygnus credits results come out, that's when Cygnus Real Estate Finance Limited's financial year ends on August 31. So good dynamic. And as you saw, Cygnus credit basically lent about $5 million US just to Neuberg Equity Partners recently. They're doing some debt raising because the leaders told you they're going to go to debt market to get more capital to deploy to the companies. I'm not sure if SRF paid back SCI their money, and for those asking what I'm talking about, SCI established a credit line for SRF, which was disclosed in their audited financials for the 2020 audited financials in the prospectus. You can watch it out, guys. And SRF tapped $130 million worth of that. So Cygnus Credit is benefiting off of SRF, and then us SCI shareholders are benefiting as well for those who want to buy into the SRF IPO by a discounted price. So price-wise, Cygnus hasn't performed to where it should be, but the company is still building to this $100 million US target, and the company is still delivering results. So what more can I ask for? The reality is some companies take longer to perform, which is fine, but you either ride a wave where you just move money elsewhere. You don't hold that stock for infinity if it's not going to be in your desired dream. But end of the day, you need to know what vehicle you want to drive, as Randy would always say, Randy Rowe, and how you're going to get there. And SCI hasn't been that vehicle for many persons, but for those who prefer this kind of company with this kind of business approach and giving this kind of capital returns to investors, it's fine for them.
Yeah.
So look out for your next SCI dividend in October, guys. Mailpac has been Mailpac. I really can't describe them because they haven't just been eating food, but mercy, those freight charges. So for those actually wondering what Mailpac is a company that deals with, basically moving goods from point A to point B. So in this case, from Florida to Jamaica. And they also have their local business, which basically moves your goods from like a Price Mart or a Hilo to your door at a cost. And they just launched their MasterCard, prepaid MasterCard. So they're a diversified little business, but the reality is when Amazon makes money, Mailpac makes money. That's just the generation you can derive from that. But yeah, so Mailpac, that's a day you're out at low 270s, ticked up around that $4.40. You won't see it on this line chart. And after the results came out on the weekend, it might as well like, nope. But for those who were prepared and had cash, this is a buying opportunity because stock bet like $3.31, and that was back at $3.71 a couple of days later. So When there's bad
even in that
news,
short term, that was at least at 10-15% for those who would have got it at 331.
let's actually check it out. 371 minus 3.31 divided by 3.31, 12.08%. Minus fees of about commission of
about 10%.
2%. Yeah, 10%. And the dividend would have come after right here. So why not? You're just winning. And as Randy pointed out, Mailpac has probably given back about 25% of those who bought into the IPO their money back in these dividends in call it 2 years. So
yeah,
big up to those investors who sell through everything from COVID to then and now. So Mailpac's giving those returns. But because of, and right here leading up to the, wrong time period. Right here again, earnings season. So right here, Mailpac released an unaudited Q4 and the results were less than expected, price dropped. Again, earnings season, it was a Thursday, results came out, price drop. Why? I'm first wondering what's going on. Mailpac has had some expenses which have basically crushed the growth in profitability. And this is related to like the freight. So for those wondering, when COVID happened, logistics players like Mailpac got a surge in business, which was great for them. But at the same time, there was a displacement in logistics. So when Mailpac brings goods in, they use Caribbean Airlines, just like many other couriers. But Caribbean Airlines isn't as efficient or fast in recent times, based on drop in demand and this not being their core business model. But yeah, and
I'm seeing as well where a lot. I mean, we're talking about it on Twitter other day. Separate would have mentioned. I think
Ryan was mentioned that the shipping costs.
Yeah. And I think when we looked at the Indies report, we saw that as well, that they had some costs due to freight. Yeah, man. So I think we're gonna see that a lot more for this year, especially that companies are gonna report that higher cost for those who have to ship.
And the thing is, that can't fully pass off to customers because we're all in depressed economies, and if you pass those costs off, people are going to stop buying your products.
Yeah. So it has to be a balance.
And I was actually watching a CNBC video. Well, I didn't get to watch it, but there's something called shrinkflation. I feel like, wait, what? Shrinkflation? You have inflation, deflation, disinflation. What is shrinkflation? So you have a bag of chips, which cost you, say the bag of chips has 100 chips inside, and it costs you $1. Are they going to increase the cost and charge you $1.10 and give you the same 100 chips and you probably buy less, or give you 90 chips or even 80 chips for the same $1? So for some companies in the staples business or the food business, you're going to see more companies just give those compressed offerings or just cut back on the servings, because it's either they increase the cost directly and pass it on to you, or you get less as you actually spend and you just suck it up and just move forward. Because the reality is, Jeremy, give me a second. I was going to give a new clip.
All right. So while we wait for David to come back, what we're doing today, for those who joined us after the start, we're going through stocks to watch. So we're just talking about some stocks that we're interested in for the upcoming period. So let us know in the comments below whether or not the stocks we're reviewing are of interest to you as well.
Yeah, so what I was actually going to mention was that the JMMB and another entity, they wrote to the Minister of Finance saying that the government needs to adjust their take at the customs in terms of, I think it's the CIF. I can't remember what that term is, a customs something fee, to reduce by as much as 75%, because they're saying, hey, if the government does not reduce their cost in terms of what they collect at the wharf, inflation is not going to be pretty for the general population. So the depreciation of the Jamaican dollar has been significant, because at the start of the year, I said at 140 to 64. Do I remember that, guys? Please, my mind is very special. Let's see what the actual rate is at the end of today. 155.55. Somebody got to buy some cash pot. No, I'm not advising you to gamble, guys, but if they get the joke, you get the joke. So 9.05%, and that's the depreciation of Jamaican dollar from the start of the year to now. And people are like, wait, what's so bad about that? So for those who don't realize, when dollar depreciates, costs are going to increase incrementally. But with the exponential jump in shipping costs, it's a different story. So for those wondering, a container, which like you'd basically get from China, would cost probably like $2,000 2019, right? Or even in 2020. Now it's as high as 13,000 US dollars. And even Kalia said, on her show that recently even somebody who's in the business of bringing in containers said they got an invoice for $25,000 to bring a container. And for those wondering how logistics business works in that sense, is that when you export goods, you try and make sure the container is full. Okay, you don't want to waste money
exactly.
in terms of that. But here's the thing about it. If your country doesn't export as much and just imports most of the time, you're sending back empty containers. Because of COVID, there's a displacement in where containers were placed because businesses moved where it needed to go. So while cars and other commodity-based businesses kind of slowed down and dropped in demand, things like home equipment and so on shoot up very fast. So because of that, what ended up happening was that containers were displaced in different parts of the world, and as a result, you have a container shortage. This is the containers are basically missing, guys. They're just in the wrong place, and because the recovery isn't as linear across the world, you have displacement right now, and everybody's competing to get their goods in time, and it's just been a mess. So Mailpac, is saying we could always just use the other courier company, which brings in through the plane, but that would increase our cost to our customers drastically, because even during Christmas, Mailpac spent $100 plus just to get the customers' goods on time for the Christmas season. So that kind of shows you what's going on in the world right now. Companies like Mailpac and those involved in logistics, or even just bringing in food, because the fact that united groups like the JME and other entities are coming together saying, hey, government, cut back on the fees of currency at the wharf quickly, because if we try passing this cost on to consumers, inflation is going to be pretty.
So I think persons should bear this in mind for any company in your portfolio that would have to contend with these costs. Just bear in mind that could impact the reports that you'll be seeing. So just bear that in mind.
Yeah, and some companies have had to show it in their cost of sales. So for those wondering, you have cost of sales and you have direct expenses. Direct expenses are like, utilities, paying your professionals, paying staff, so on. Direct costs are like your freight, probably raw material costs, and so on. So, these increased shipping costs are going to show up in your cost of sales line. And like Lasco, your GraceKennedy, your separate have said, hey, we'll have passing some of these costs on very soon. And for those wondering, like, why is it that we can't just be like the US and just, do have these drastic costs passed on to us? The US has scale. We don't have that. We're just an island. So kind of gives you guys an idea as to what's really going on in the world.
Yeah.
So
I think that should just have persons temper expectations. But I mean, for those who, one of the things we talk about here in terms of what moves stock prices is great performance in terms of earnings. If there's higher cost, and the earnings aren't going to be as impressive, and so that may cause you may not get the reaction that you're expecting in the short term. Anyway.
So like as you can see right here, look, Mailpac's revenue went up by $100 million plus, more than 30%. But
zoom into that, David. Zoom in a little more.
Yeah. Sure.
Yeah.
So Mailpac's revenue went up by like $105 million, but cost of sales kind of just treaded along, and then general admin expenses went up. And as you can see right here, there was no taxation charge, but profit was flat basically. EPS is flat, but profit went up slightly, and that's why people just sold the stock down, because they're saying 2 quarters straight cost of sales went up like this, because for the Christmas quarter, they understood in a sense, because Mailpac wants to keep the customer base and keep expanding, but 2 quarters of just these drastic increase in cost of sales is really dampening the bottom line. So top line is growing, but bottom line is what matters. So I hope that give you guys some context as to what's really going on when you look at even this Mailpac in this scenario. GK just released the results. So this should actually be a very little interesting analysis. So what is GraceKennedy for those who don't know? And I'm continuing with the same approach, guys. I'm going to assume you don't know what these companies do, so you can actually learn. So GraceKennedy is a diversified financial conglomerate with a bunch of a large footprint in terms of food trading. So as you can see right here, GraceKennedy's revenue went over 26 billion. And for those wondering, when you see this mark of dollar and these accompanying zeros, it's meant to come on right here, but they don't just show it. So in this case, this is $26.6 billion. This is in 26.6 million compared to $30.8 billion just from revenue products and services. And when you trade along, you realize that expenses went up relatively, but here's the funny thing about it. GraceKennedy has kept everything else stable. And even though taxation went down slightly, this is the consolidated net profit, but profit to shareholders was up big time. Like, I think this is what? 35, like 42%. I can check right now. And that was me guesstimating, guys, so don't think I'm a calculator. Wow, 35%. I just guessed, guys. I did not calculate beforehand. Neither did I read the report. So, as you can see, GraceKennedy's profits for the second quarter was up by 35% alone. And for context, guys, this company has passed $100 billion in revenues for the last 2 years, passed $6 billion in net profit last year, and is kind of basically at 3.6, more than halfway through their 2020 results. So that's crazy. And you look even right here at the 6 months comparative, 3.58 billion versus 2.75 billion says that, hey, they're not coming to play, they're coming here to make money. And shareholders must be pretty happy for that. So let me just type in GraceKennedy audited. And that's another way I find reports, guys. In this case, I just type in GraceKennedy 2020 audited. Because the keywords will basically show up. That's how you kind of reduce your workload if you're doing searching online, guys. Keywords. So GraceKennedy is $6.86 billion in consolidated net profit, $6.22 billion in for profit attributable to shareholders, and they're well past the halfway mark already for 2021. They are supposed to, and in notes right here, I'm going to scroll up. As you can see right here, they said that they've, basically gotten the approval to acquire the Scotia Insurance Eastern Caribbean Limited recently. So they said end of July, which is in 2 days, they should be closed. So they really mean tomorrow. And these results will show up in this current quarter, the third quarter. And they said the second acquisition, which was A76 Springwater, underway, and GK said they had about 10 acquisitions in place, so 2 down. Who knows what's going for the rest of the year? And Key got a rights issue money, so that's something else to look at. So when we add these results on in terms of Scotia Insurance Eastern Caribbean, we probably might see GK really break the 2020 in just 9 months. And for those who aren't aware, this is the balance sheet. So for GraceKennedy, assets have gone up from 171.7 billion at the end of December to 185.28 at the end of June. Just pretty strong. And as you go down, you realize that company shareholders have a good amount in terms of equity relative to liabilities, which is pretty good. And I mean a financial services group, so it kind of makes sense in terms of the context. Skip down. And operating cash flow is strong with a capital S. So for those who don't know, net profit is nice and cute, but that also includes the depreciation, which is a non-cash charge. Probably have unrealized gains. So you reconcile that and you look back on the cash flow statement, you kind of get what actually came from operating the business or cash flow. And GK is going very strong, $6 billion from its operations relative to $3.6 billion last year. That shows you the strength of the business. And as you can see right here, they kind of, saw cash outflow from the business and from investment activities, which is understandable because they have been spending more in investments, but cash is still up for the year to a record $26.66 billion. And no, I don't think this was deliberate, guys. And when we go down to the segment analysis, you kind of see where GK's money is really coming from. So let me just zoom in some more again so you can see clearly. It contributed $49.75 billion, while last year contributed $44.94 billion. Profit before taxation is $2.79 billion compared to $1.87 billion. And money services, which was the number one earner of GK's profits, did $2.09 billion relative to $1.81 billion. So I want you guys to kind of understand that people are eating a whole lot more, because in the past, money services was king. Now, food, which was always GK's visible face brand to the general public, is king. And that's pretty interesting. So GK, this is a very good rest of the year going on. And as you can see right here, insurance and even banking services banking investments are up again. And for those who don't know, food trading is like your Vienna sausages, your tropical rhythms, your coconut water, the L.E.A.R.N brand in the USA. Banking and investments is like your GK Capital Management, your First Global Bank, and so on. This is like Key Insurance, GK General Insurance. Money services, this is your Western Union, your FX Trader, your Bill Express. So I hope you guys kind of understand what I'm talking about, and I'm going through these different segments to give you an idea of what the business actually does. Because I want you to actually appreciate what I'm speaking about. And GK was pretty interesting today because before the results came out, somebody sold on in the queue to the point where the price went from $100 to an intraday low of $91.66. $91.96. So just see how tomorrow plays out, because GK broke the $100 barrier and is struggling to stay above there, but they might just stay there. And here's the funny thing about it, guys. When I had to invest back in 2016 August, GK had just done their stock split, a 3-to-1 stock split, when the price went from $124 to just $41. So imagine you would have $100 back then in 2016 and you're like, you want about $100 quickly, and you're like, wait, there's 100 again? And this is the kind of just to show you guys that investing isn't one-sided, or you can't always say, a price is too expensive, because value is relative for most people, but at the same time, a company is great. It's just great.
That's the thing I was gonna say for GK. There's always a challenge, it appears to me, in terms of the price. So any stock that seems to be priced over, to some persons, it seems like if it's priced over $10, because a lot of persons even looking at the SRF IPO as expensive at $19. So it just depends on the stock. There are some persons who just, so it all depends. But as we like to say here, focus on the value of the company and not the price, because there are some stocks that are cheap in terms of price, but they're not gonna give you the same consistent performance as maybe a GK would.
And that's the thing about it. It's just a perception, because at the end of the day, the company is still paying quarterly dividends now, not even 3 times a year, but quarterly, still growing, and the price is moving up steadily. But for some persons, they're like, isn't worth their time, and that's their opinion. But at the same time,
Yeah, if it's not for you, it's not for you. But just know that, I mean, for the companies that you want to invest in, companies that are performing, and not just the price being low. Because if you invest based on the price being low, then you may miss some really good opportunities.
yeah, and for Orville asking about, the market starts to sell, I think he's referencing the GK price earlier today, and that's just somebody just selling into the market because people need cash. That's just the reality of it. So that's what you're talking about. Somebody just sold into the market. Somebody got lucky because imagine GK will just come out today and you're looking to get at $91.96 until the price goes to $110 tomorrow. You just been good.
And then here's the thing: a lot of persons are like, "Is the price too high? Is the price too high?"
The
Then
price is too high.
when it gets to 120 and then 150 and then 200, they'll be like, "Man, I should have bought at 100."
Well, look at this, Jermaine. Look at where GK's price is, and look at the year-to-date results.
Yeah.
55.09%.
Yeah.
And let us just divide $1 billion. 1 billion. Let me count the zeros. Divided by 995,069,405. Oh, so basically GK just needs to pass $100 again to reach $100 billion. That's a very elite club on the JSC. Very few companies have actually reached there. NCB, Scotia, GHL. It's special. It's Game of Trinidad. A massive coming shortly is going to be more than $100 million, $100 billion to be correct. Barita did it recently, and GK just going to prove that, hey, you buy for value, you're still winning.
Yeah. So again, guys, we just want to say, be sure that you're investing for value and not for price.
Because you can make profits in the short term, yes, but at the same time, you have to know that, hey, what do you actually want? Do you want gains in the short term, or do you want to buy a company that you can just use the retirement stock? Because for so many persons, stocks is their pension. And for those who don't know about this, in Jamaica, you're entitled to have more than one pension plan. And that's one of the limitations of our law. So in the USA, you can have multiple Roth IRAs, 401ks, whatever you need to do. But the thing is, because of the limitation in Jamaica, with one pension, and the fact that inflation is rising much faster than the potential return of a NIF, National Insurance Fund, or a National Insurance Scheme, or even your company's own pension plan, the companies you invest in, which are growing probably faster than inflation and giving dividends at a similar rate, are probably going to take care of your old age. So
yeah. And it's good to, on that note, I just wanted to say, for those who do have a pension plan, you may want to understand how that pension plan is constructed, what it's being invested in. I mean, that's not a topic for today, but just that's always good to check.
And one thing to mention, for those who actually invest in Sagittarius pool investment funds, because for those who didn't know, you can actually have your own private pension if your company doesn't offer one, with like a Barita or a Sagittarius, a proven, you have JMMB, you have options. So in the case of Sagittarius, their pool investment funds, their audited results and their annual reports are publicly available. It says what is in the actual portfolio of those pool funds. So you can check it out when you get the chance, guys.
Yeah.
And just for you guys to understand what's really going on. Jamaica Broilers Group, Mr. Chicken. Mr. Chicken, what is going on? JBG has done well under the circumstances of COVID. I can't disagree there. I'm going to show the article financials shortly, but let's look at what happens for the year to date. Up 23.49%. One of the best performing stocks for the year. And for those actually wondering, yes, for year to date, JBG at the end of June was one of the top 10 performing stocks year to date. Same for GraceKennedy as well. In the case of JBG, article just released. Just going to quickly run through so you can get an appreciation of what actually happened. So as you can see, revenue went up slightly. Like, you kind of get a realization that 6.95 billion, where it's 5.75 billion is very small. Even the gross profit kind of reflects that. like just about $18 million difference. Other income was up significantly, and I don't have time to go through the notes right now, guys, but if you look at the notes, it talks about an insurance claim that the company got. Distribution cost went up slightly, admin expenses went down slightly, and for the persons wondering what the difference between this is, so quick accounting lesson, when you have receivables, which is money outstanding for you for a service carried out already, you basically record an impairment charge or a reversal, depending on what the person, on how the accounting treatment is done. So in May 2020, with COVID and everything, they had a impairment charge, and then in 2021, they had a impairment reversal. And the thing is, the impairment charge doesn't necessarily mean that you actually person didn't pay the money at all. In the case of for simple and short, when a person actually pay the money off, you reverse that actual impairment charge or impairment provision. And just for those who actually always see impairment provisions or credit loss provisions and income statements, that's what it actually means. It's just accounting treatment so that if the loan, or I shouldn't say the loan, but in this case, the money that you're owed isn't paid, it's an item recorded along your income statement over time rather than all at once, and have a deleterious effect on the actual performance. As you can see right here, because of in this case, the jump in other income, the reversal impairment charges, operating profit was up like 33%, from $3 billion to $4.06 billion. And with lower finance costs, which in this case indicates lower interest charges on even debt, this was the consolidated net profit, guys, which is just everything. But when we go to attributable to shareholders, you'll see that JBG did a very good job, more than 56% in terms of increasing profit attributable to shareholders from $1.4 billion to $2.34 billion, which is very good. And for those who don't know, Jamaica Brothers has segments. Here we go. So Jamaica had $33.97 billion in total revenue, while in 2020 that was 34.98, which kind of shows the drop in demand in some areas of the country. US did 23.97 billion relative to 22.47, and Haiti did $2.4 billion relative to 2.1 billion. But when you look at the segment result, it's an entirely different story. So Jamaica did a very damn good job for Jamaica Broilers. As you can see, $4.47 billion in segment contribution. And that's compared against $3.17 billion when things were actually operating at a better standard, because JBG got hit with about 1 month and a half of COVID. So for it to have better segment result year over year, it's pretty good. And even with US operations, it was slower, 1.59 compared to 1.48 billion. And Haiti's
last with the US probably getting more back to normal now, then the US number should look good moving forward, right?
Agreed. And I think they made it hatchery operations in the US, just kind of like eggs. So I have to look back and check, to be honest, but it's pretty good, because as someone said, when would you actually have thought that Jamaican companies would be acquiring companies in the USA?
Exactly. Yeah.
And Haiti is just Haiti, you know, it's a mixed bag. They just said the presidential assassination, poverty, but hey, they chose to invest in there, and they had recorded the loss this year, but they're pretty confident in Haiti, so that's what this thing can actually do. The next stock, I'm going to rush through quickly, guys, is L.E.A.R.N Trading Limited. And this company actually acquired 2 companies in the USA, in this case, New York, at the start of the year. So look at that. Jamaica Brothers acquired in Virginia, I think it was, and then L.E.A.R.N acquired in New York. For year to date, the stock has been relatively flat. Only up 3.35% year to date. For those who bought in the APY shareholders, that's slightly higher in terms of profit, but it's really not been all that spectacular. And right here was publicly known that Mayberry was actively, Mayberry Jamaican Equities Limited was actively selling into the market part of their holdings in L.E.A.R.N, which is why the price was kind of stuck like this for most of January. And then
that was an interesting thing, by the way, but we'll talk about it another time.
Yeah, and then for those who actually have access to the queue, you see that another large order at $2.65. The diamond stock price has kind of been stuck because of some of those large sell orders, but companies' results have been pretty good. For those who saw last Learn, Grow, Invest, who I did research, I kind of show you that Diamond doing very good. Results should be out by August 15, the latest, which is the due date. Sorry, August 14, which is the due date for all companies reporting their audited results for the period ending June 30. And as I said, companies doing great. Stock price might eventually go up in the future if things actually smooth out, but I'm not complaining. The business is growing. It's cut back on debt. The stock price is a feature which should go up if people are confident in it. So let's just see.
David, Stephen asking you if these are new recommendations. Or are you just going through?
No, I'm going. So guys, this is my list that I published at the start of the year, January 10. I am not.
Boy. You know what? I understand the question, Stephen, but I mean, I think it makes sense since you would have published them at the start of the year. I don't think you've given an update, so I mean, that's fine. That's fine to look at it. So I mean, what we can probably do, David, what they would probably be interested in, since we have maybe about 10 minutes left, are there any stocks that you're interested in? No, like which is there anything added to that list?
JMMB Group Limited. Like JMMB is just on fire, man. Like for those who read the annual report, and what I keenly said, the JMMB Group Limited 2021 annual report, JMMB says that they're looking to close on 2 acquisitions and enter a new market.
Yeah.
For those who don't know, JMMB operates in Jamaica, the Dominican Republic, and Trinidad and Tobago. And for them to say, hey, if all this cash, it's an acquisition. We're going to prevent to Costa Rica. Like, and the thing is, for those who don't know, remember that Sagicor Financial Company has been doing their share buyback. And as they have more shares, JMMB's ownership in Sagicor Financial Company is actually increasing without spending a dime of their own money. So that kind of shows you what I'm thinking. Like, and remember, last year they're in their quarter 1 and quarter 2. And for those who don't know, JMB's financial year ends on March 31. So this June 30 will be their first quarter. They took a 9 million share of loss because Sagicor Financial Company had a loss at that time because of Playa and a few other things. Q2 was like $100 million share of loss with Playa gone in terms of it was classified now. And JMMB itself performing still admirably strong. It's going to be a great year for this beast. And as I said, remember, SFC is not accounting for losses, and they're actually accounting for more of JMMB. Sagicor Financial Company was spending a dime. So
we're gonna, so the poll that we did, so for those who are here for the first time, we do a poll at least once per week asking you which stock you'd want us to review. JMMB GL is a stock that we'll be reviewing next. So David, maybe you can share, help us connect some of those dots in that stock review. The thing is, though, the caveat here is it's not going to be live because this is actually our last live video until September. So hopefully you guys don't get too mad at us for that. But we're going to start pre-recording some content, publishing it, so you'll still see videos from us, but they're just not going to be live like this where you can ask questions. So just bear that in mind. So we'll still be releasing videos. We're just not going to be going live again until September. All right. So just, stay tuned to our Twitter, follow us on socials. We will be releasing at least 2 videos per week. So the stock review for JMMB is coming out soon. We just won't be doing it live.
And Denise asking about Fesco. To be honest, boy, Fesco is just like at the mercy of the government. I have to be honest. They are at the mercy of the government because start of the month, government is like, everybody, have your freedom. My children, be free. And then they're like, oh, sorry, kids, get back in the house. Playtime is over. No, like
Oh
that's
my
that's, that's,
gosh.
the, that's the
No,
best way to describe
but
it.
but the thing is, David, I remember when these restrictions were being lifted, everybody's like, yes, we get to go outside again. I was like, give it time. Give it time. Man, it's yeah, it's rough. It's rough.
Yeah, and that's the thing about it because Pesco is a gas distribution company, or in this case, a marketing company, which is the its own technical definition. But short and simple is their brand. They have the brand, and then they distribute gas or sell gas to the dealers, and then the dealers sell the gas to the public. And then the thing is, they are still working on their Bishop Avenue location. I passed by today. The housing space, like the convenience space, is still under construction. The overhead spaces that they cover is complete, but yeah, and then the location on ferry that just recently opened, which is good because it's gonna sell gas to that actual location, so that's a little bit more revenue and profit. But the reality is, if you have to come off the road by 8 o'clock, it's a problem. And on Sunday at 3
Yeah.
o'clock, and I think about it, we go FESCO benefits when there's actual movement. Same for Trans Jamaica. When the government restricts persons from traveling and they're driving less and even doing work from home, especially with COVID right now,
Yeah.
it's rough. But the good thing is, because of their tax break from being listed in the junior market, that's the saving grace. So the next results will probably be much better because last year COVID was much more drastic, but still the tax break is going to boost up the bottom line right there.
Yeah.
And then
Yeah.
the Barita,
So
Barita,
yes. Yeah, go ahead. Go ahead.
So Barita is looking to do another additional public offering based on their notice of their EGM, which is next week Tuesday. And for those that didn't know, Barita actually said on to the JSC that they're planning to do a dividend consideration next week Wednesday. So it's going to be a fun time. And for those who have been following my articles, I did some math, and to be honest, Barita's API is already open and shut. And if you're asking why, when I did the math, their parent company Cornerstone has invested 16.23 billion Jamaican dollars into Barita's last 3 equity raises, which have totaled about $23.85 billion.
Mm-hmm.
First Citizens Bank gave another, I can't remember the specific amount, like probably $2 billion or something like that. And then 294 Inc. bought into the APO as well. So, it's really basically open and shut because look at it. Cornerstone basically invested $8.96 billion. Barita said they want to raise $9 billion before the upsize. So I expect it to be open and shut, to be honest. Like, I want to see them say, hey, EGM approved. Let's move on. I just want to see that.
Yeah.
And then the question about
Barita has shown its ability to consistently perform well. So that's one of those companies I don't really worry about in that regard. I think somebody else was asking about JMMB.
I saw it a while ago, the preference shares. So guys, that's an entirely different situation. So remember, with the ordinary shares, you have ownership in the company, direct ownership. You also have voting rights, and you have unlimited potential in terms of profitability. Price can go to infinity, and I'm not saying it goes to infinity, but that's just the idea of ordinary shares. The preference shares, people are going to buy relative to their perception or even what they expect. So, but I think what the JMB 7.5%.
But you were saying something interesting about preference shares the other day on Twitter as well.
I'm going to explain it shortly, but all right. So with the 7.5%, if person's mistake the JMB 7.5 as the JMB Group Limited and buy it up, the price might go up. But hey, what can I say? What can I do?
But you say that can happen if a person who is brand new to investing, maybe they have their JTrade account and they're just looking and seeing JMMB, they may not understand the difference. So I think Stocks on the Rocks, Simon had mentioned that they're going to do something explaining preference shares and the differences and stuff like that. So maybe that will help.
Well, I was going to point out was that, okay, so for those who don't, okay, so short and simple, L.E.A.R.N Limited did a preference share issue which closed on Monday, and what happened was that they have some preferences that are listed on the JSE, meaning it's already there in the market, and it is one at another rate of 7.5%. Not like not the same stock like JMMB, and it is a par issue value of $6. Earlier this week, I think it was Monday, persons were buying up to $17.04. So let me explain short and simple, guys. If you buy up a preference share above par value, just remember, if the some of the dividends remaining on the preference share do not surpass the premium, you're losing money. And in this case, a lot of money is going to be lost for those persons who bought at $17. So let's break it down. Let's say you buy 11,000 units at $17.04. That's $187,000, right? That's your principal that you invested. When the summer 2024 comes, Apple is going to be like, all right, time to renew your preference shares. We're going to take back $6 per share. So you invested $187,000, and you're going to get back 66 grand as your principal. Minus, and that is include dividends, but even if you include dividends, you're still going to be a massive loss because you had 6 figures and you know at 5 figures, and that's just basically a 70% plus loss.
Yeah, I mean that when we were talking about it on Twitter, and guys, follow us on Twitter, please. I thought that was interesting as well, because I was wondering maybe they've calculated where the dividends can maybe make up that gap. But when you said it, there's just no way. So maybe they know something we don't know. Maybe they expect the price to go up even more from where it is right now.
Well, somebody put it their order for 200,000 units to sell at $12.89. So somebody's capitalizing and like, hey, I bought it for $6. I guess it my dividends, but somebody's willing to buy 100% off of me. I'm going to take that sale. So trust me, like,
agreed.
It's craziness, and this is why I tell people all the time: contact your financial advisor, ask on Finance with JA, ask your friends. If your friends don't understand, just check Google, because
it's kind of L.E.A.R.N, grow, invest.
It's kind of sad to know that you would have put up 187 grand, guys. That's almost more than half of your tuition for the year for a regular student, and want to get back 6 grand. And you can't come up there and say, yo, everyone money there, because the practice is public, is a parable that's already known, and it's rough because so for me, guys, like I'm a long-term portfolio, I have some JBG 7.5%, I bought some at 70 cents, and I'm happy because above 70 cents, I'm gonna get paid back at $1 in January 2024, which is a 42.7% gain on my money, guaranteed. So in that case, discount works. And if you buy above par, in this case $1, you have to calculate and say, all right, in this case, it's a variable preference share. So the rate changes every year that has a January. So 1% is guaranteed at all times. The BOJ's weighted average treasury yield, but 180 days always changes. So you have to do your homework, guys. And this is why, it really pays.
Yeah, it's really hard to see people lose money like that. But I mean, the best we can do is there are a lot of forums out there to educate. Please, if you don't understand, speak to somebody who does. Speak to a licensed financial advisor. So that's our time though, guys. David, any final thoughts that you want to say maybe for a minute or so before we close out?
Well, some of that I was looking at in terms of what I look for going forward into 2021. Carib Cement basically beat out the 2020 in just 6 months. That's the manufacturing. There is Creamy. Like, keep eating ice cream, guys. You're making Creamy quite rich. Then, there's also, Carreras, which is a little off there, but with the new distribution deal, it's pretty good. And then, Jamaica Teas says they want to do the spin-off. Still watching it. And for those who don't remember, King's Properties says Limited is going to do an APO. So if you had your preference share already, if you had your on-year share already, good for you. But for those who don't know, if you buy a share and they say the record date for shareholders is the day of the prospectus release, you're in the shareholders pool. And that applies in the APO. So take note of that, guys.
Yeah. All right. So I placed those pics in the chat for those who would have seen it. Guys, if there's any stock that we didn't discuss, just post it in the comment below, David. We can just answer those questions. If you have questions about any other stock, post it in the comments. David will get to it, or myself.
On Twitter, I'm messaging you.
Yeah, or just tweet us out and ask us about it, and we'll respond. As I said, guys, we will be doing videos. We just won't be doing them live. I have to, I'm a new dad, so I have to spend time with my son, spend time with my family. I promised that I'd be taking a break in August, so I have to. So we will be back September 9th. Will be our first live meeting again. So if you want us to cover topics, just send it to us. Post it in the comments of any video. I'll just acknowledge it quickly. David, thank you so much, guys. Follow David on Twitter. And just look out for his articles. David, whenever you have a new article out, I would say tweet it and tag us so we can retweet it for persons to see. Lots of information.
I'll just tag my link tree. My link tree is
yes,
every
that is
time.
true. That is true. That is true.
If I keep posting my articles, it's gonna be endless.
Yeah, that is true. So guys, thank you so much for being here with us. 49 persons, we appreciate it. Please, we have only 13 likes on the video. If we can get 50 likes, that would be amazing. Thank you so much, David. Appreciate it. We'll definitely see you again for a future video. All right, so that's it. For those who want to stay connected with us, we will be doing Twitter Spaces on Saturday nights. Hopefully I can go maybe at least halfway August. Then I'll probably break for the last 2 weeks again. So yeah, but follow Stocks on the Rocks. Most of you all already know about L.E.A.R.N. So you see, taking stock every week, Money Mondays. Follow David Rose, and yeah, you have enough content out there to hold you over until we get back. So thanks everyone. I'll see you soon.
Take care, guys.